Let's go ahead and get started so we can honor your time and get done as close to 7 as we can. Give Lisa a break too, because I know it's at the end of her day as well. But I want to thank you guys for coming to join us tonight. I'm Jim. Just about everybody here knows me, but for those who don't, I'm Jim Herring. I'm the principal of Pathways Academy in Albuquerque, and it is my pleasure to be able to introduce Lisa. Lisa, how do you say your last name?
Fugate. So
Fugate.
the way to remember it is Montana has tons and tons of fences, but very few gates.
There we go. And that's what I would have guessed, but you never know. So, it's after 15 years at the school, it's been obvious to me that you all as parents of the students you have sometimes are thinking a day out, a month out, maybe a year out. And it's that idea of planning further out, even into your retirement and what your students may need from you in your retirement can really easily get away from you. And Lisa, I met Lisa recently, and we thought this would be a great thing to offer you all as a jumping off point, if nothing else. She's going to talk about a few things that everybody really ought to consider if they're looking at it, and then there'll be time for question and answer in the second half of the hour. So thanks for being here. People will jump in as we go, but in the meantime, I'm going to turn it over to Lisa. Thanks, Lisa.
Thanks, Jim. So today I'm going to talk to you a little bit about creating financial security for your loved ones with special needs. A little bit about myself. I am a financial advisor with Northwest Mutual. I'm a mom of 2 kiddos, 10 and 12, and I'm going to be excited as the week continues as we get through school this year. Married. I actually live in Colorado, went to Highland. My parents are still in Albuquerque, so spent a lot of time there, and well-versed on the area, the church where the school is, all of those things. I work with a number of families with kiddos with special needs, and I believe this in general, but that everybody deserves a financial plan, and more importantly, somebody to help them on that path. Plans, in my opinion, are not static. They change because the one thing we know is that life changes. I think there's obviously that you guys are living day to day. There's a lot of added complexity. And so making sure that you have that solid foundation for a plan, as well as all the future things that have to be planned for, is really important. Some of this stemmed for me when I was actually pregnant with my son, and one of my good friends was pregnant at the same time, and her son was born with a disorder called CDLS unexpectedly. And she and I have been along this journey that time on what to do and what to plan for. And there's so many things to consider. So I just have a lot of conviction. I have a lot of respect and understanding for everything that you guys are doing and how you're doing so many amazing things for your kiddos. So today I'm going to switch over really fast and pull up the presentation. So don't worry, my whole face will not be on the large screen right over there, Mark. I'm glad for that. Okay, so I already went through that piece of it. So let's get started. Did it move forward? No. Okay. So my thought is that most of you are here today because somebody that you have has special needs. You want to give them a secure future, right? It's typically why I would assume you're here. So one of my questions to you would be, and you can share or you can put them in the chat, but what are the things that keep you up at night the most? What are the things that you worry about the most? Anything in general?
I know for us, it's the security and ensuring that he's got a safe space and people to help look after him. We are very fortunate that he has 2 siblings, but I also want to minimize the disruption to their lives because they deserve to have full lives as well and not be, put into a caregiver role as a very, very early on. And so making sure that we have ways of keeping him safe and happy and not putting that burden on his siblings after we're gone.
Absolutely. Thank you for sharing that.
I think for me, it's making sure that we've done everything that we can to honor the life that Colt wants to have as an adult, and that we know and he knows what's available to him and how he can access those things and support. He knows how to use those support resources. So really just kind of that transition of him kind of taking ownership and knowing how to navigate all of that, which is a whole process of itself, you know?
Absolutely. It's a whole process. And making sure all that information is there and available for him. And how do you get through those steps, right? I mean, I think the biggest thing, right, is, and you already said it, is making sure that they're taken care of, that they're safe, they're secure, but also making sure that they're able to live their best lives, right? That they get all the things that they deserve and that they're looking forward to and that they want as well. I think one of the biggest things too is, you know, you guys are not alone. There's so many families out there with very similar concerns. I think we want to make sure that your whole family is taken care of, but definitely, you know, Colt or your loved one, Brooke, that they're taken care of in every way possible. I think the biggest thing is you want them to thrive, right? It's not just survive, it's thriving into their best life. But you also, you know that planning for their future is going to be a little bit tricky, right? And also a little bit scary. And I think it's the big thing there is just knowing that you're not alone, and there's definitely ways to help with that. So today, my goal is really to provide you with some information. I want to show you some practical steps you can help take to ease your mind. I would say for a lot of you, you're probably at varying points within this presentation of what you have done, maybe you haven't done, and that's okay. Just, you know, keep that in mind as we go through here, that we want to make sure that the goal is to see how we can take care of your loved one during your lifetime, as well as after you're gone. So as we go through their steps, there's a couple things I want you to consider. One, it's never too soon to start planning, and maybe you already have, maybe you have more things to put in place, but the sooner you do those things, the better you feel. The next thing is you don't have to do it all today, right? Obviously, there's some time limits depending on how old they are and where you're going, but planning is definitely a process. You can manage it over time, and that's for any plan. So you want to start planning, you know, things for today that you're sure about. There may be things in the future that you don't know. I mean, again, very one constant is that things change. So as things change and move, your plan can change and move. So you don't have to do it all at once. It's also quite normal to feel overwhelmed, but one step at a time. Last thing is you're not alone. There are people, resources along the way to help support you. Okay, so what we're going to look at today is these 4 things and a couple others, but the first one is building your team. And we'll talk a little bit about who you should have in your team and the role they play. Hopefully, you know, we'll see if some of you have some of those team members. There's probably some others that come into play, but there's kind of 3 categories in building your team. Developing your special needs plan. So each of your situations is unique, and there's some different views. I mean, you guys all want different futures, and that impacts your planning. Same thing as government benefits impact your planning, right? Future cost of care will definitely impact planning. So we'll talk about a few of those things. We'll talk a little bit about special needs trusts, how they can be a great tool for planning, as well as I'm going to give you an overview of those ABLE accounts, what they are, how they work, and some of the differences. And, you know, let me know if you have some questions along the way. Okay, so let's get started with building your team. And so whenever I start with families such as yours, it's always about like who's on your team. There's definitely some needs in there that we want to make sure. I would say there's a lot of other folks that come into the team. I mean, Jim's probably one of them because education is a huge thing for your kiddos, right? There's also, I know Sangeetha's on, but like DD waiver, like who are you meeting with? And some of that could come from a government benefit specialist. I'm sure you have therapists and caregivers and all sorts of other people that play into this. For today, from more of the financial lens, these would be the three core that we would want to make sure that you have on your team. Again, we talked about this and you guys live it. So the complexity is a whole lot. So it's making sure that some of these people can really help you. So the first one, financial professional, someone kind of like me, really to help you plan for those financial goals that you have for your loved ones, as well as yourself. Like that's one thing I don't want you to forget about today is it's important for you to plan for yourself and the rest of your family as well. A government benefit specialist. So this is the person who's going to help you take advantage of all the government benefits you're eligible for, you know, resolve some of the care management issues, things like that. And we'll use specific examples throughout. Last one is an attorney. So somebody who's definitely experienced in working with families like yours. A lot of times this is going to be an estate attorney's possibility, elder law attorney is another one. It's okay if you don't already have this team in place. I'm sure you have pieces and parts of all of it. But I think it's one of the first places that I like to start with families, just to make sure that we know what all the pieces are. We know if there are any gaps and how we can help mitigate that. And this team can work together to make sure that if any of those gaps are there, that we're solving them and resolving them over time. And this covers a lot of those financial bases to make sure that we're planning for the best possible future for your loved one. Any questions on why a team is so important? Any comments? Okay. So the next part we'll talk about a little bit is developing your special needs plan. So once you've got a team, starting that plan is important. You may have already started, so maybe it's rejiggering it, just bringing it together to make sure that you know where you're going with it. I think the very first thing is to really understand your current situation, what your goals are. You know, a financial professional typically help you with that. I mean, I spend a ton of time with my clients on this. I actually spend more than an hour just going through some of these pieces and parts with them in the beginning. And everybody's situation is unique. So we want to make sure that when we're coming up with solutions for the plan, that it makes sense for you and your family. So that's why usually financial advisors really need to understand of where you are, where you want to go. So we ask questions like about your family structure. What does it look like? Your immediate family, your extended family. What about your job? Is it flexible? What does the future look like there? How are you doing with spending and saving? You know, if we're looking at what do you want out of life right now? You know, maybe right now is building that new porch, right? Or taking a trip. But then what is it in a few years? What's that medium term look like? Where do you want to go? And the last one is, you know, what are the long term, decades from now? What does it look like? What are your goals? So the last one that I love is what's the dream for the future? What do you want life to look like in the future? And then of course, you know, we get into questions like, what are you worried about financially? And I think I bring all these things up because I think it's something that you can start to think about without meeting with somebody, but it's important for you to understand all of these things as you're going through it. So there's that's the you, and then it's your loved ones. You know, it is really important for you to know, you know, we talked about a little bit earlier about what keeps you up at night, but what do you want for them? You know, what do you think the best life for them looks like? And what do you envision? What do you want them to have? Where are they going to live? You know, who can provide day-to-day care if that's needed? What are the social activities that you want them to be a part of and how do they get there, right? These are all examples of questions to ask. And I think, again, we can ask a ton of questions and it may seem overwhelming to start with, but I think it's at least getting those questions down and getting this foundation so that we have a starting point to figure out how do we get to those goals. All make sense?
Yeah.
Okay. So the next part of this is really understanding, now that we know where you are and where you want to be, so it's important to get those benefits, right? I mean, I know we've had a couple conversations even today, right, on the DD waiver. How do you get that? When do you use it? Those types of things. This is some of the other, I guess, probably different benefits. I think the DD waivers obviously specific to all of you. And there's many more of these, but some of these benefits to look at, right, are the supplemental security income and retirement income. What does that look like for when you retire? There's some differences between today and then. Medicaid, those healthcare and custodial home care services, are we still qualified for those? What does that look like in the future? How do we not impact them? Vocational services, we talked a little bit, I think you said the DD waiver is helping with, how do you find placement for employment potentially? What does that look like? Obviously we have public school services, but you have your own, right? Through Pathway Academies, some of those different things. The last one that I think some people forget about sometimes too is, they could be eligible for medical assistance, medical coverage, and some of the other services through the U.S. Department of Veteran Affairs, depending on somebody in your family being a part of the military. So these are mostly, the more well-known benefits. Many others, they all offer different types of aid, varying eligibility requirements, tons of information to sort through. And I think what I do see is a lot of people leave some of the benefits on the table, mostly because it is complex. There's so many different things. And we talked a little bit about how you should include that government benefit specialist. This is where that person comes in. They should be aware of all of these different services that are available. And they're going to help you get the resources you need on that, so you aren't leaving anything on the table. So let's talk a little bit about the Social Security benefits. Depending on how old your kids are and what they have, sometimes it makes sense, but I guess as they get towards being an adult and 18, some of those things change tremendously. So I want to look a little bit, and maybe this, but let's look at how those benefits are determined. So for supplemental security income, so if the child is under 18, it's parents' income, assets, and household size that just determine the eligibility. So in a lot of cases, your child may not be eligible just because of where you are, right? But the difference is once they turn 18, right, that completely changes. So they're now considered a legal adult, and the federal government is looking at their assets. So instead of yours, basically, if they have less than $900 a month in income or assets, they could be eligible for those benefits starting at 18. I sometimes have a challenge with that because $900 a month is not a lot of money. And I feel like everybody deserves to be making way more than that and have more in income. But these are what the standards are today. In 2023, that benefit is could be up to $914 a month in a benefit. Yeah.
On that 914, that would be on top of their job that they would have as well, correct?
Yes.
Okay.
That's the benefit that would come through. The biggest thing is if their job income is higher than 900, they may not qualify, which is, in my opinion, 100% ridiculous, but I won't get on my soapbox right now. Yeah, but this would be the additional benefit. And sometimes this is for those who are, maybe it's so much that they can't work, or it's volunteer work, or I have a client who it's their sister, and she basically volunteers, but she doesn't get paid for it because she can't, and so it impacts her benefits. It's just something to consider. Hopefully your children will be making more than this, would be my hope. But retirement, this is another thing. So once both parents are retired and start taking Social Security, your child could be eligible for Social Security benefits as long as they were considered to be disabled before the age of 22. And this is the language within Social Security Administration. That benefit can be up to 50% of your benefit. And it all depends on your work history, just like how your Social Security is calculated. But what's great about this is that if, that claiming that, your child would make on these benefits, it doesn't affect the parents' social security benefits. It's an additional, component for them.
So I have a quick question about that.
Yeah.
So when you say if your child is considered disabled before age 22, so for instance, my son is on DD waiver.
Yeah.
He is, he's approved for Medicaid through the DD waiver program. So
Yeah.
would that be considered then disabled before age 22, or does it have to be some other determination?
I'm sure there are eligibility factors on there, but I think the DD waiver obviously helps with that. We can look at it from the qualification. There's a way to go through it, but yes, I mean, as long as typically it's as long as there's probably a diagnosis and there's benefits already being received, they would be considered disabled given these standards. So, but you do have to go through the eligibility factor when you go through it.
Yeah, we have to go through it like every year for DD waiver.
I know, I was going to say, how many times have you been through it would be my question. Probably many times at this point, right?
And Lisa,
So-
did you say
Yeah.
that the parents, that if the parents retired, that the student or child could receive 50% of whatever that social security payment that the parent would be receiving? Was that
Yeah.
correct?
It's up to 50%.
Okay.
So let's say you're taking social security, your work history, and again, I'm making up easy numbers so I can do easy math, but let's say you're getting $2,000 a month in social security. They could receive up to $1,000 a month in that social security benefit, and it doesn't impact yours.
Okay, thank you, Lisa. Just want to make sure I understood that.
Yep. So it's a on top of, and I think it's one thing that, this is one area I know that people are usually like, oh, I didn't know that was a thing. I didn't know we could do that and take advantage of it, but it's just one of those other ways. The other thing I would say about a lot of these benefits, they may not, like, especially this one in particular, because you may not be taking Social Security, right? So they're not going to qualify for this benefit right now. But, I think it's true with a lot of the different benefits that they may not, like, I know the DD waiver, as I heard through the conversation, right? It can take some time to actually get it. So they may not qualify today, maybe they qualify later. So there are things to, continue to consider over time, I guess is what I would say to that. All right, so the next thing is determining.
One
Yeah.
last question.
Wait, you muted, Mark.
Okay, go ahead.
Okay. Would this be on top of the previous slide? And what if the retired parent was deceased? Would that benefit still carry on?
Yeah, so Social Security, it's a good question. So Social Security is a little complex just in general, depending on when somebody dies versus what you get and how much you get. The deceased question is a good question. I don't have the answer off the top of my head, but I can get it to you to make sure that carries on.
Thank you. I'll be quiet so you continue on.
No, you're fine. You're fine. It's better than me just talking the whole time. I appreciate it. Okay, so let's see. So one of the other things that I think is challenging, right, is what are the future costs? What do they look like? What are you planning for? There's a lot of questions to it and how you estimate it. And of course, like, you're not going to know every bit of medical care or help they're going to need throughout their lives. You're not going to know that today for what the future looks like. But there are things that you can look at estimating, and things that you should probably take into consideration that maybe you haven't thought about yet. So for example, right now, you're probably providing a lot of care for your loved ones for free, right? So you don't charge your son or daughter every time you take them to like a physical therapy appointment or, a different therapist. Of course not. Well, I mean, That's not what we do, right? But if they outlive you, those services are not going to be free anymore. So that's one thing, like one example of what to consider. So, and I know we don't really want to think about it, but it's scary, right? And it's a little bit sad too. You know, if you all pass away first, who's going to care for your loved one the way that you do? So trying to have this plan in place is important. So let me take a step then. How do you even quantify what these costs look like, and what you need to cover in the future? So I will say the government benefits specialist can definitely help with that, some of those future costs. A lot of it takes into account, so where do you live? What are the things that you're currently providing for them that would have to be taken on by somebody else? You know, depending on, you know, whether your child will be able to live on their own or not, you know, what are their different needs, and what are their different conditions? So you can really look at an analysis for those estimates. You know, some of them is, you know, are there monthly costs that you have to pay a professional for the services that you're taking care of right now? The government the government benefit specialist can really help with some of those things. But some of it starts with you sitting down and saying, okay, what are all the things we do that we know of? What are the things that we think we can predict, and at least have that as a starting point to look at what those numbers are. Some of those numbers you can get on your own. Some of them would be through a specialist. Some of them may be ballpark, right? They may be just a placeholder for where you are now. Once you get those numbers, you know, whoever your financial advisor or professional is can make sure that that information's incorporated into your plan, so you can start to help fill in those gaps, right? So maybe there's just a different investment fund that's what's going to fund those things in the future. There's a few different ways to look at how that could be used. Maybe it's an ABLE account, special needs trust, etc. But this is about so you can feel prepared for what the financial future looks like, for you as well as your loved ones. Does that make sense so far? And by the way,
if my son chooses to live with us as he gets older and he's an adult, will that go against his benefits that he could receive?
not necessarily. Let's talk about the, so I want to talk, some of the benefits are different, right? Especially the ones that impact like housing and like basically food and shelter versus some of the other accounts and what those impacts are. You know, housing in particular, so living with you. Right now, the assumption is, you know, Medicaid's basically going to cover that. That's what they're there for. That being said, what it covers is not necessarily always what you need. So a lot of times, you know, family members are living together just because it's a better place for people than what can be offered. So it doesn't necessarily take away the benefits. Could there be an impact? Maybe, but it's typically not an impact to those. Okay, do you want to, can we jump to special needs trust, or are there any other questions? Okay, so how many of you have heard of a special need trust? You can just put your hands up if you know what they are. How many of you have one? A few of you? Yeah.
We were told by our lawyer not to begin a special needs trust until he was closer to 18. And so our plan is to fire that up the month before he turns 18, but I'm not sure if that's.
I'm interested as to why that would be. It's interesting. I think some of it depends on how you're going to use it, I think is one thing. I would defer to your lawyer because they're in a state, you know, they're definitely doing trusts on a regular basis. I would say I have a lot of clients who have the trusts because they want it set up, especially with the beneficiary designations, et cetera. But it's important, you know, it's definitely something important to look at and to make sure that you have. And we'll go through a little bit as to why. For those of you that may not have one or not familiar with one, that's okay. It's just one of those other added benefits that I think is important to fund some of the other things that the government benefits don't provide for. Those benefits like Social Security, Medicaid, they cover the bare necessities, right? Like food, a place to live. I mentioned that before, but special needs trust is used to pay for those other benefits that the government doesn't provide. Things that can make, their lives better, like things like rehab or supplemental medical care, computers, entertainment, travel, all of those types of things for the future. Those are all probably things I'm assuming you want your loved one to have. But I guess the question is, and probably why, your attorney was like, let's wait until they're close to 18 to open it. Why should you have a special needs trust? The biggest thing is all of those government benefits are based on income and asset limits, right? So if you go over some of those limits, they then take away some of those benefits. And Mark, that's more of, whether Colt's living with you, right? You don't necessarily means that your house is in Colt's name, right? That would take away from, some of the benefits they're getting. It's all about the assets that are in their name. So for example, let's say one of your parents leave your child money and that goes directly to them in their name. The government then assumes that money or income or assets, right, is their income or assets and it's in your child's name, and that will disqualify them from getting some of the benefits that they've been relying on because you've hit some of those thresholds. The intention is giving that money was probably, the purpose was to give them a better quality of life, but it could end up doing the opposite if it's given directly to the child. So if you have a special needs trust, they can be then left to the trust instead of the child. Then they're no longer, your child's no longer the direct recipient. So it does not count towards those assets and income. That's the biggest thing. So that means that those government benefits, they're not affected typically. So I like the special needs trust. They go a long way, especially in the future, and what they can be used for. And I'm going to do a comparison in just a minute so you see the difference between this and an ABLE account. But it goes a long way towards, making sure that your child is still getting all the government benefits they should be getting without hitting some of those income thresholds because it's not in their name. All right, so a few things we already know. First one is you got to hire an attorney to do a trust. This is complicated stuff. It is something that should just be done by that attorney, specifically either an estate planning attorney or an elder law attorney, because they will set it up the right way. Nobody else should do this for you. I'm going to leave that there. The next thing is they're going to, when you set up the trust, if you already have one, this, or if you're working on it, they're going to set up what's called a trustee for the trust specifically. And you can have family members trustee, but it is way more common for a bank to fill this role instead of an individual. And it's something to consider. Somebody in Albuquerque who works at US Bank that's what she does. She's the trustee there. And so she has this woman as an example, and banks in general, they have experience in this area, right? It's their job to know exactly what can and can't be paid for by the trust. And having that bank as the trustee, make sure that money isn't being withdrawn for the wrong things that could disqualify them from the benefits that they have. So, I know a lot of people like to pick family members because it's more of we'll say the emotional family support element of it. But from a pure benefits perspective and what you're looking for there, I definitely think that it should be somebody within a bank. Make sense so far?
Yes,
Okay.
That's a big task for someone to do. And I think having an emotional supportive family member versus having a financial person it's a lot to ask of someone to do. And
there's so many nuances, there's so many complications, and because there's so many government benefits involved, you need somebody who knows what they're doing. And not to say this the wrong way or not to put words in your mouth, but it could be a burden if it's a family member because they have to figure so many things out.
I was just about to type burden in the chat thing, but I spaced it out. But I mean, but it is, and of course that family member wants to do right, but maybe they just don't know how to. And it's difficult.
Yep. So when you're thinking about a special needs trust and one way to fund it, one thing to consider is life insurance. I have a lot of clients who they have special needs trusts. They're not putting money into it right now per se, especially not when their kiddos are younger and you're just trying to get through day to day and all the, everything associated with it. But, as a parent, the worst thing that could happen right now is that, both parents pass away early and the child isn't taken care of, right? That is a super scary thing to have happen. But, when your special needs trust is in place, you can have the insurance policy on a life insurance policy actually pay out to that trust, either on the death of either the first or the second parent. It depends on how you want to set it up. It depends on your situation, but this is a big step towards making sure that your child is taken care of no matter what. The other thing about this one is that it can be set up so the remaining assets go to your other family members, right? If you have other kids, if you have somebody else. So if, that child passes away before the funds in the trust are used, the money isn't lost. The remaining money goes to family members, secondary beneficiaries, etc. All good? Okay.
I had a quick question. Oh, never mind. You're going to talk about it now. Okay.
Okay. All right. Yeah, I have a few slides on ABLE accounts and some of the differences. So obviously some of you have heard about a 529A or an ABLE account, which stands for, achieving a better life experience. Do any of you guys have ABLE accounts? Nope. So these are basically tax-free savings accounts. People have to be diagnosed with a long-term disability before the age of 26 or before their 26th birthday. They can be set up anytime and they can be very helpful. I would say this, we've talked about special needs trust, we've talked about ABLE accounts. This is not, depending on your situation, it could be or it could be both. It doesn't have to be one or the other. It depends on your situation of what you want. Some of you have probably heard of a 529B account, which is savings for college. This is a 529A. It's set up very similarly to the 529B, especially from tax purposes and things like that. I don't know if any of you know this, but all of these lovely words like 529A, 401k, those types of things, they're named after the tax code. I mean, we can't get any more creative than that, but they're named after a tax code. So, but these accounts can be set up anytime. So part of it is why these are set up is that a lot of people with disabilities depend on public benefits, right? You're depending on basic needs like food, housing, healthcare, etc. These programs all have that asset limit of $2,000. This is the key thing. So if you have assets above $2,000, you are typically ineligible for some of those programs going forward. And this goes back, Mark, to the question about, assets and those limits and income coming in, right? ABLE accounts do not affect your Medicaid eligibility, no matter how large the account gets to be. It does, however, affect supplemental security income eligibility if it's over $100,000. So if you think that's something, and I know depending on how old your kids are, definitely with younger kids, a lot of times they're not eligible for that supplemental security income, but that changes over time potentially. So that's one thing to consider. Any contributions made to this account are post-tax. So you've already paid your taxes on it. And some states allow tax deductions on them. New Mexico is a little bit interesting. They allow some, we'll say, and it depends on the account. And I'll talk a little bit more about that. Colorado, for example, just changed this year that all of the contributions are tax deductible. So I'm hoping that's the way New Mexico is moving, but it's not all of them, at least not by what they say as of, I was looking at it last week. So the money in there grows tax-free. And when it's used for one of the qualifying benefits, the money you take out of the account is tax-free as well. So that's a good thing going forward. So, the question is, what can you use it for, right? In this case, you can use it for education, housing, transportation, employment, right? Some of those assistive technologies, if that's needed, personal support, healthcare expenses, and in general, just about anything that's going to help improve your loved one's health, independence, quality of life. That could be changes to your house, right? That could be upgrades. There's a whole host of things, just like the special needs trust, that can come into play there. One of the things that does happen with ABLE accounts is there's sometimes, depending on state, any money that's left in the plan after the passing of that person must be used to reimburse the state of Medicaid support. Now, the way that it's written for New Mexico is that it's used first to repay any outstanding qualified expenses, anything that hasn't been paid yet. It'll be used for funeral and burial costs as well. Medicaid could choose to make a claim for any back pay on the premiums that have been paid, but they have to make the claims for it. It's called the clawback rule. I will say that many of the states are starting to reverse that now, because they've had, probably less than they would have liked interest in people actually putting money into these accounts because of that rule, because of what's remaining. There's 5-10 states already, a bunch of them happened this year, that have gotten rid of this rule. And so I see it kind of as a wave happening now across the country of a lot of those states that are starting to get rid of that rule from a clawback perspective.
Lisa, so going back to that slide, our understanding is the benefit with using an ABLE, in our case, in addition to the special needs trust, is that the ABLE is more generalized for what you can use it for. There's not a whole lot of, making sure it's exactly for what it's, right? It's more, it's easier to spend the money.
It is
qualified for it, so.
That's right. And I'll show you the comparison in just a minute between the two of what you can spend it for. But that's a good summary. It is definitely more general. You always want to keep, figure out receipts and things like that just to make sure if it comes back. But absolutely, it can be used for just about anything. Yeah.
So Lisa, I had a question. So we have a 5, and I'm sure a lot of you do, the 529B saving for education. So I'm worried, for one, I don't want to use A and B. For first of all, I'm worried that I'll be considered an asset at some point. And then also I'm thinking that maybe that money it's possible or should be moved at some point into an ABLE account, since that can be used for education as well.
Yep. It probably makes sense if the 529B, there's an ownership piece, right? To make it recognized as whose asset. If you're the account owner right now, even if your dependent is the beneficiary, right now, it's not an asset for them. It may make sense to move it into an A because, to your point, you can use it for other things like education.
Thank you.
Yeah. It's definitely an interesting, the good news with that is, moving it's always interesting when you're moving it out of an B into an A. I haven't actually moved anything out of a 529B into an A, mostly because a lot of my folks are doing them simultaneously. It's a lot about making sure of whose asset it is and the ownership of the account, right? As long as it's deemed like in your name for right now, even if they're the beneficiary, it's one thing to definitely figure out. But I'm going to look at that just because I want to figure out what the possibility is around doing a transfer for that account. Okay. So a couple things, right? If you don't have an ABLE account already, and if it's right for you, again, every state has different rules. If it's something helpful, I always recommend talking to, a financial professional first, just to make sure that it fits your broader plan, if it's the right thing at the right time. I have a number of clients who have both the special needs and an ABLE. They're funding the ABLE, but the special needs is basically a beneficiary for either them, other family members, things like that. Sometimes I have people that will put, like, if you own a house, You know, if something happens, that's going into the special needs trust, right? Things like that, that are big resources. From the ABLE perspective, I like this website. It's a good place to just get into it. I will say this, New Mexico's, their ABLE account is actually called a stable. It's the stable account. It's at ablenewmexico.com. And there's a lot of good information on their website as well. But this will give you just a general idea, you know, just general information. They have a lot of good webinars and things like that that you can leverage if, you know, of when you want to use it, what are you using it for, etc. So this is what I was talking about. So here's more of the side-by-side comparison. Again, it's not an either or necessarily, it could be a both. So eligibility differences, right? One is has to have happened before the age of 26. The other is there's no age limits. So it's interesting because, you know, Laurel, you were talking about how one's general and one's a little more specific on what you can use it for. But I would say a special needs trust is a lot more general on how you can qualify for it, contributions, things like that that go into play. The setup, an ABLE account you can do online. It's easy setup. There's no attorney fees. You basically, it's just like inquiry, like your 529, your 529B, I'm sorry. You open it up, you know, you can do it online, you know, through the stable account, right? Obviously with a special needs trust, you need an attorney who's going to specialize in that state of planning or elder law to draft. It's way more complicated and there will be a cost to do that. Contribution limits. This is a little bit different actually. So, it's 15,000 is federal, 17,000 is what you have in New Mexico with the additional state. Plus, depending on your employment, it could be up to $13,590 more that you could add into an ABLE account. Every state's a little bit different. That's why I was like, it's 17 in New Mexico plus another potential 13,590. There could be some tax benefits associated with it. And we'll talk, it just depends on how much you're doing and where you're coming in from. The special needs trust, there's no contribution limits. You know, it could be $1 million at any given time, right? The account balance limits, and this again goes back to those benefits, specifically for that Social Security income, it just can't be more than $100,000. If you're getting close to that, because it's an investment account, you want to make sure that you're stopping contributions well before you hit that $100,000, because if there's any growth on it over a course of time and it goes over, you're going to want to go and you're going to want to find, you know, a different, I don't know, you're going to want to go do acupuncture. I don't know. I'm making this up, but go find something else to spend some of your dollars on to make sure you're not over that, to screw up some of the, you know, your benefits. Special needs trust, there's no maximum. There's no maximum on that. One of the biggest differences, and again, Laurel, this goes back to yours, it's a wide range of uses. There's a ton of things you can use it on. An ABLE can be used for housing and food. The special needs trust cannot. The special need trust does not do anything with necessities at all. And it's a little bit, working with a different client, you know, trying to figure out if her son is going to emancipate and things like that. If he does, she wants him to go to a very nice community in California, but it's expensive. And so she's like, I can't use that from the special needs trust. No, but can we take the money out of the trust and be able to push it into another account as you're needed? There's some of those types of things that can be looked at when you're doing it, but it's a little bit complicated on that setup, especially with housing, because what Medicaid pays for is probably not always where you want your child to be, right? From a taxability perspective, distributions on an ABLE account, they were taken out from an income tax perspective already. The special needs trust, they may be taxable depending on what type, right? So for example, if the house is in there and you sell the house and there's capital gains taxes on the growth of the house, that may be something that's taxable on a special needs trust. Things like that, not necessarily like a dollar contribution, but some of those pieces. Remaining assets, we talked about that already, just may go back to Medicaid if it's an ABLE account, but it definitely passes to family members that you want. What I will say is and this is something to talk to an attorney about if you don't have the special needs trust. A lot of times what will happen is there will be a family trust at the top with a special needs trust as another part of it. Because especially if you have other children, you know, they'll have things go into the special needs trust and then filter down, or go into the family trust and then filter down into the special needs trust. So there's a little bit of a diversification there. The last one is ease of access. So, you know, I was actually thinking about this when you were talking, Mark, about Colt and, you know, if he's going to work and things like that. The nice thing with ABLE accounts, and New Mexico's has this, they have a stable Visa card. And basically you can put money onto those cards from the ABLE account. You can limit what it is. And basically it's kind of like I want to say a prepaid card, but you put in a certain, on this one in particular, you put on a certain amount of money that they can spend up to. So it's not like they have full access necessarily, but they have access to get what they need and do what they want to do from it, right? Again, this is a big difference with a special needs trust. You have to request the funds from the trustee, right? There's no checking account. There's no credit cards associated with it. And there's reason for it. It takes a little bit of time to get that money out. But at the same time, it's making sure that it's not being spent on the things that it can't be spent on that would affect those benefits. Right, that's a lot.
For you. So looking at these two and comparing, it seems like building up the ABLE account and getting that really established is probably a good first step, and then bring in the special needs trust a little later on. Does that make sense?
Yep, absolutely. I think, and I think, Brooke, this goes back to what you said with your attorney, right? It's one thing to establish a special needs trust, and so you have it, so you can make like life insurance beneficiaries. There's not actually money in there, but you know that if something happens, it will go there and it won't affect anything, right? Same thing, like if, you know, it's, you have property or you have another account that you want as a beneficiary. One of my clients, again, I'm jumping around, I have a fair number of them that do this, but they have set up the family trust, have things like the benefits and things like that going in there, with it then going into the special needs trust, depending on what they need for their daughter, because they have 2 other kids. And so they want to make sure that it's set up the right way. But you're absolutely right. Like that ABLE account, just because it can be used for so much more, it does have limits, but you know, it could be upwards of $30,000 that you could put in. And it's a pretty high limit for most people, right? That they can put in on an annual basis. And it also means it doesn't say anything about when you use it, right? Like a 529B, you're using it for college and it's a specific time frame, and you have, you know, in this case, that's not the case. It can be used now if you need it, right? All right. Any other questions? Brooke, did this get to what you needed to? I know you were asking about that ABLE account. Okay.
I just wanted to just mention about that ABLE. I mean, when we talked to Colt about this, I think an important piece for us as he continues to get older, every step along the way is to always talk about ownership. You know, this is his life.
Yep.
And I think this ABLE, it empowers him. He has access to this money, and of course it has parameters that we can set. But I think for him to really feel like I am becoming an adult and this money is here, and I hope it grounds him a bit and provides him some sense of footing.
Yeah.
Instead of things being so abstract, right? So he deals really well with, oh, this is an account and this is the card and how I would access it. So that was an important consideration for us.
Absolutely. That's fantastic, right? I mean, giving them that sense of ownership is important. To your point, it's their life. But there's also, you know, there are some limitations. So it's not like you're just opening up the floodgates and saying, here you go, here's $100,000, right? You can definitely limit what that looks like, but it gives them that feeling of, yeah, my life, I'm going to figure out how to live it. And, you know, you're helping them do that.
Now, Lisa, I got one other question. So can Colt say he's getting Social Security benefits and other benefits? Say he has extra money left over. We're all dreaming this is the case. So he has extra money left over each month. can he put that money into one of these accounts himself?
Sure, he could put them into the 529, probably the special needs, but I would say just put it into the 529.
Okay.
You know, some people will put together like, sometimes they'll put it into like a high yield savings account or something else. But the problem is that then goes towards your asset limit as you start to look at it. So it's better to put it into this account that doesn't actually apply to that asset limit. I think there is talk, I'm not confirming this, but I think there's talk that they're going to start raising that $100,000 limit. You know, I don't know when, but I was talking with somebody recently and they think that that's, you know, one of the next steps to come is to kind of increase these numbers, especially with inflation and everything else and how things are getting more and more expensive. I just hope that some of the other government benefits will follow suit. Okay, any other questions about those two? Okay. All right, I'm going to be remiss if I don't do this. So we've talked a lot about that planning for your loved one. And I know that's, you know, obviously one of the most important things in your life, and it's natural to try and figure that out first. But I do think that it's something I don't want you guys to forget. Like, it's important for you to plan first as well. Like, do you have your plan in place? Do you know what you want to have happen? You know, the goal is not to put your financial security at risk either, right? And so making sure you're thinking about things like retirement. Do you want to pay for, you know, kids' education, right? How about maybe it's a new home or you want to buy a home, or maybe there's a business opportunity. So it's also about your dreams too. And that's why it's important when you're doing this financial planning that you have like that solid foundation for you, as well as what you need for your loved one, right? Coming in over top. So when I think about it, you know, it's important kind of to do that whole goal planning, working with a financial professional to do that. You know, what do you want for your own future? Again, this is, you know, you're not going to put a plan in place that covers absolutely everything right out of the gate. It's just not realistic in most situations. So I think what I do with my clients is, before I identify all those goals and then I set priorities, like what's the number one goal, what's number two, what's number three. Let's do a phased approach on how you can complete it. So you feel like you're moving the ball forward, right? You're getting some of those pieces and parts done. And then the next thing is really customizing the plan, creating it and executing on it to make sure that you're moving forward with it and it's moving with your life. We've already talked about that, right? With life, that is the one constant that it changes. Who knows what life throws at you the next day? And so making sure that your financial plan is something that's reviewed on a regular basis, you know, at least once a year, I would say, if not twice. And I will say, like, one of the things I do is I have at least 2 regular meetings with my clients a year, and then I have extra other conversations between those 2 times. But it's just making sure that your plan continues to fit with what you want, right? Maybe you want to move to Texas or Arizona or somewhere else, right? I'm not saying that, but maybe you do. What does that look like when you want to do it, and how does that move forward? A couple things with just choosing a financial professional. So very first thing, it doesn't matter, but it is very, very important that you pick somebody you trust. Your finances, your loved one's finances, make sure you trust them. And if you're not happy, you look for somebody else. You know, working with somebody who has experience in planning for special needs is going to be important. I will say, even with the number of clients that I have, I usually tag team with people. There's a couple different offices that I work with that's all they do. And so I like to make sure that I have, you know, multiple eyes when I'm doing that type of planning. It's complex stuff, and it's important to have multiple people looking at what you're doing just to make sure that, you know, you're covering all your bases. You know, the other thing is about making sure your financial professional is going to work with you over time. It's very true. Like, as life changes, as your kids get older, as they get approved for a DD waiver, you know, things like that, it's going to change. And so you want to make sure that that person is going to work with you as well to make sure everything's on track. And the last thing is just making sure there's somebody who is working with, you know, a company with a strong history, has the highest ratings in the industry. It's just important to make sure that, you know, everything's moving forward and it's on the above board, and you can trust what they're, what they're coming with and what they're providing for. All right, last slide. So first of all, we're going to recap. So assemble your team, financial professional, government benefit specialist, attorney. Then I would say, obviously, all those other people that support you from a team perspective and may already be on your team, right? Jim may be one of them. Therapists, all of those types of people that are going to come in and help. Second is really developing that plan. So doing your goals, understanding current goals for today, medium term, long term, and deciding that future state, making sure that those benefits that you have all of them. And I guess you guys live this day to day, so I don't want to preach that, but making sure that you're not leaving anything on the table. Estimating that future cost of care, right? Thinking through what are the things that you can think of today that you're going to have to predict in the future, and seeing how you can come up with those amounts. And then establishing and funding that either special needs trust or the ABLE plan. Again, I think it depends on the general piece and what that can be leveraged for and where you think your kiddos will be, right? Colt has some, will have some independence. That's a good thing. He has a card, he can use it, he can leverage it, but where your kiddos at, just making sure that it's the right plan for them. And the last thing is, just don't forget to plan for yourself. It's probably probably the most important thing, just to make sure that the future is secure for everybody. All right. Any questions? I know we're already at 7 o'clock. Sorry, it took a while, but you guys had good questions and good comments. I love it.
Sorry, Mark, go ahead.
No, you go ahead. Go ahead, Brooke. You first.
I just had a quick question. This might be a silly question, but when you talk about a government benefits specialist, my son is on DD waiver, so he has a case manager. And
Yep.
so when we're talking about like Medicaid or, respite care or different therapies that he's eligible for, they're definitely the person to talk to. But
Yep.
how would I find someone to determine, and like we have made relationships with the DDR for vocational rehab, but in terms of actual like security benefits and those things,
Yeah.
where do I find that person?
Yeah. So a lot of times, the case manager in that case probably has a lot of the information. And I would say, I'm going to say this, a lot of times that benefit specialist is not just one person, right? It depends on what that is. And so there's a few different organizations, and I can send a list after if that works for you, just on places where you go. I'll be honest, I'm a little more familiar with Colorado. We have a couple of developmental pathways is one of them, one of the organizations, and they provide a case manager and they look at the whole picture. A lot of times it's county by county when you look at it. Obviously, Bernalillo County, right, is probably the biggest one. And there are definitely some people in there that can help with it. Just because some of the counties have some different, there's some different eligibility requirements with it. So I'll come back and I'll send you a list of a few different organizations if that works, Brooke. Yep. Okay. Mark, you're up. What's the next question?
So this may be a silly question, but I know New Mexico has the DD waiver, which Colt's been approved for, that we put on hold until he turns 18, because there's a lot more services at that point, is what they told us they would be eligible for. But if we moved away to another state, do most states have some kind of DD waiver type of program?
Mm-hmm.
And
Most of them do.
Qualify for this, wouldn't it be hopefully a smoother and easy transition to be approved elsewhere as well?
I would think so. I think it depends on the state you're going to, though, because I know, like, here in Colorado, we have a lot of people that move here just because of the benefits for all the different types of benefits. Actually, 3 of my clients and their newer clients have moved from out of state to Colorado because of that. You're going to want to check, though, before you make that move, to make sure that that transition is easy. I don't know the answer depending on the state that you're going to. I think it's one thing that you'll just have to figure out. If they've already been approved in one state, does it maintain in others? I mean, I would think so, but I don't want to point you in the wrong direction.
Right. Okay. Thank you.
Yeah.
And my understanding is the benefits vary widely. So even if you get on the program, you don't expect, my understanding New Mexico also has a pretty rich program.
Yep.
So when you move like somewhere else that you may not get nearly the benefits, like it might just be, it's a certain pot of money. And I guess it's the way it's spread out over a certain number of individuals. So it's might be less in states maybe that are even more populated. I don't know.
I know we did look at this when Saxon was right before Saxon got put on the waiver, when he was on the waiting list. And what we were told, we were going to look at Minnesota, and what we were told was that's fine. They'll take he very likely would be approved for it, but he may be back on a waiting list. Like you wouldn't necessarily, they wouldn't just transfer one for one. You probably would be back on the waiting list. Although many states didn't have they had like an 8-month waiting list and not a 12-year waiting list. So it wasn't quite as bad.
Is New Mexico's 12 years?
It was. Michelle Lujan Grisham actually put everybody on the waiting list into the waiver program about a year ago, which
Good.
basically they eliminated the DD waiver waiting list and everybody got on waiver, except that they didn't increase the number of providers. And so now everybody's on the waiting list for providers, but they're on the DD waiver.
Still a list.
It's lovely how that works. Well, and I think Corey, to your point, that is a big thing. Every state is different on the benefits that they provide. It's all state by state. And so, and it probably does have to do with population a little bit, but I know, even though, I mean, the clients that I've had that have come to Colorado, most of them have been East Coast, like heavily populated, Maryland, New York, some of those places. So, getting on has been a little bit, probably easier. I think that's the other thing to consider if you move states is just how easily accessible are all those benefits. Obviously the waiver is one thing, but all the other things that go around it, and how many people they have there to support you, how many organizations, what do the different counties look like, all of those types of things. It's a lot of questions.
I have a question in relating to like your services that you would provide, attorney services, all these things. How important, or is it that we do this with someone who is in the state that we're currently in? We tend to live a really transient life, and it's likely we'd be moving across state lines again. We did this in Maryland. We got everything set up in Maryland, and then we moved to Australia, and we're far from, now we're in New Mexico, and I feel like, how much do I invest in someone if it's going to be tied to
A state or a location? So two things, and I would separate like what I do from financial advising versus an attorney. So attorneys are bound, right? I'm married to one. So, they're bound by the bar that they have to take in every single state. Sometimes they're reciprocated depending on, like, New Mexico has reciprocity, with a number of different states. So if you're starting there, that would be one thing to look at to say, okay, you don't want to keep starting over with somebody, but if you have somebody who, one of two things, A, has the ability to practice in other states, that's going to be important for you. I mean, Australia is a little bit outside the picture, if I'm being honest, from an attorney perspective. Also, what's their network look like? Can they, do they have people if you decide to up and move to somewhere that don't have the bar passed? So attorneys are a little more difficult. They do have a large network of people that work together, so it may be able to find somebody. Financials or advisors are typically easier. So for example, the place where I have the most clients is Colorado. My second highest state is New Mexico. I can work in any state, and it's not difficult. I don't have to take a bar every single time, right, to do that. So for example, I have clients in 27 different states right now. And, there's some challenges if you move out of country, depending on where your assets are. That's the biggest thing. If you still maintain them in the States, then that financial advisor still should be able to work with them. But there are definitely a few more restrictions if you're out of country versus in country.
And as a financial advisor, are y'all also advising that we have our own tax guy, or can y'all offer tax services?
Yeah, there's a couple different things on tax services. So CPAs, right? That's another person I would probably add to the list. They're definitely like I don't I advise on tax mitigation and distribution strategies. So making sure that you have money in the right account so you don't pay as much in taxes later, right? Making sure you're taking money out at the right time, especially in retirement, so that you're not hit with like the required minimum distribution taxes all at the same time. Things like that from a tax strategy. CPAs are the ones that are going to be looking at things like, okay, if you are making contributions to an ABLE account, is that a tax deferred account or not? And what should you do with it? What is your year by year tax implication look like? It's not an easy answer, Laurel. I'm sorry. You know, I've enjoyed the conversation today. Hopefully you guys got something out of it. If you do want to talk, like I'm definitely available. I'll send out an email to folks after, probably tomorrow, just to follow up and see if you have any questions, and I'll see about getting some of those other questions answered. And I'd be happy at some time if you're interested in, sitting down and having a conversation about your unique situations. So thanks for spending the time with me tonight.
I want to
Lisa,
say
thanks for
thank
joining
you.
us.
This has been wonderful, because a lot of people don't even know where to get started, or they hear about this stuff, but they have no clue to where to begin. And to me, that was the most frustrating thing for us, is who do we even reach out to begin with? And how do we go down a path, or what path do we go down? So this is wonderful, and bless you for all that you do and all the people that do this kind of stuff.
Yeah. And I think it's overwhelming for anybody. I mean, for any of my clients, it's overwhelming to start. What are the questions you ask? What should I be doing? Is this the right thing? You hear so many different things. And so it's just having somebody there to guide you on that path, right? To be like, you have somebody to bounce an idea off of. Where should we start? What do we need to prioritize today versus next month, next year, right? It's that kind of thing. And it's sometimes as simple as, let's get it checked off a list. So you feel like you're moving forward and getting those things done.
Lisa,
Thank you. This
thanks
is
for joining us.
wonderful. Thank you.
And
Yeah.
we'll make sure that everybody gets contact information for Lisa if you want to reach out to her, and she will be sending stuff to you as well. And I'm sure that contact information will be in there.
Absolutely.
Most of you, I'll see you in the next day or two. So have a great week, Corey. It was good seeing you again. And we appreciate you being here tonight. Thanks, guys.
Thank you so
Thank
much.
you.
Take care.
Thank you.
Bye. So Lisa, thank you very much.
You're welcome.